Let me start with a very simple question. How many times have you come across a stock where the story sounds great, you pull up screener, you look at few numbers, and on face of it, you like what you see. But then comes the real problem. Is this business actually worth your time? See, as investors, time is our most limited resource. And especially when it comes to microcap and small caps, we are just bombarded with names, stories, rumors, Twitter threads, friend tips day in and day out. And what does most people miss is that before we go and deep dive and research, we need a simple standardized process to do that initial screening. This is exactly why I built the scorecard to create a first layer filter that helps us understand two important questions. One, is the promoter and governance quality acceptable? Two, are the financials clean enough to justify digging deeper? And in most cases, the scorecard will not take more than 1 to 2 hours of your time. And trust me, these 2 hours can save you weeks or even months of wasted research on companies that were never worth your time in the first place. Together, both sections tell you a full, cohesive story about the business. And one thing I want to make clear that this is not a stock recommendations tool. Treat it as a process tool. In investing, it is not about finding shortcuts. It is about building those disciplines. This scorecard helps you standardize your thinking. It removes emotion and helps us avoid those costly mistakes, especially in those risky microcap SME space where governance spectrum is so wide. And all of this, I'm sharing it 100% free with the investing community because I genuinely believe every serious retail investor deserves the access to better tools. So check the video description for the Excel link. Once you register, you'll find two different Excel templates that are delivered to your mail ID. The two templates would be one for a manufacturing business, the other is for services business. The whole idea being that these two businesses have different cost structure. This framework has been tested widely with microcap, SME, and small caps. It works really well, but we have not used it for larger companies. This is definitely not designed for banks, NBFCs, and companies that are, in the turnaround phase, having negative cash flows, etc. And also, another interesting thing is that the data can be directly sourced from Screener, especially the financial part of it, which makes it easy and fast for us to compile all the information in one go. So today, to show how exactly to apply the scorecard, I am going to walk you through a real example. The company I've selected is Infolion, and the goal here is to help you build a process and not an investment recommendation or any sort. Finally, before we go into it, if you find this valuable, please share it with other serious investors and friends so that it helps them to build that process, and the framework helps them in their whole investing journey. And if you want such frameworks, case studies, real world investing tools, do hit that subscribe button. And now let's deep dive into Infolion. These are the Excel which we are going to use and the screener. The M stands for, as I said, manufacturing. S stands for the services company. Since Infolion is a service company, we are going to use the services Excel sheet. These are pre-filled data. Since I worked on VFin solutions for developing this Excel, the name VFin is reflected here, not to worry. So how do you capture the data for this? Is the screener link where you upload this Excel. So I will give the description below so you can use that. Just upload this Excel. So now if you go to Infolion, and here you could see export to Excel, and the information Infolion is captured in the Excel and exported, all the latest data in the financial parameter side. So you can see the Excel is automatically updated, names are captured. These data for Infolion are automatically reflected over here. This is the data sheet from where we are capturing the data. I'm going to close the sheet because I've already worked in compiling the information for Infolion. So let me take you through how we can go about analyzing a company using this Excel sheet, the pre-screen Excel sheet. So before we go there are a few data that Screener doesn't capture. Basically, the trade payables data and the capex are not captured by Screener. So I would show how we can go on filling that data. So basically, the payables are, you can see it in the balance sheet side. So it is in the other liabilities. So all the data in Screener are in crores. All you have to do is just manually enter these. It's not a big number in case of Infolion, but in other companies, as you start analyzing, these numbers are quite large. It's a relatively new listing. And next, coming to the capex. So you could find the data in the investing activity. Again, not a huge capex. Just here, don't enter the negative symbol, just enter the value. It's basically not much capex. Once we have entered this data, you might have heard of a company. I went to Screener, looked at the basic information, charts, not much into technicals. Revenue growth, yearly revenue growth, they have been growing at almost 35-50% for the last 5 years, 4 years. Really interesting, but then is it investable? Is it worth your time to research further is the next question. So first, I would start with understanding what basically Infolion does. And how I go about with that is you have the presentations that are being given here, con calls. It is we are dealing with microcap companies, smaller companies, and the moment they give these presentations and con calls, it means that they are treating minority shareholders with respect. Before going into the transcript and con call, I have downloaded the important submissions here. Just browse through the latest investor presentation. It gives you overview of what the company does. But here's the interesting thing. If you are short of time, in the factor summary sheet, I've also given you the important ChatGPT prompt that can summarize the business model and important information. So I'll just show you how it can be done quickly. AI is a wonderful tool. We should leverage that. Our research in terms of the productivity and the research that we are able to do has increased multifold. If I were to research on a company before, it used to take a lot of time. Now, like for something which I was doing 3 days, it is now taking, I'm able to research more companies. So basically all you have to do is attach all the con call, presentation, annual report, and the latest numbers, and just enter the prompt. It's all in the Excel. ChatGPT is reading those files. Having said that, it does help you give an overview, but these numbers are prone to errors. Same with the Screener numbers. I would say they are around 95% accurate, but then agenda here is not to have the accurate numbers, but to get a bird's eye view, a concise view of whether it's worth our time to invest in these companies. So beautifully explains what the company does. They are into 3 different business verticals, as you can see. Started with expert network hiring. It's a very niche and really took off after COVID. So that is 90% of their revenue, and they're trying to diversify slowly. They're expanding into US as well. So those sales are going to kick in very soon. Immediate focus is on the learning and development tool now, which is contributing around 5 to 7%. And then they're looking at adjacencies. Key in a concise information as to what the company does. So here I have done that for Infolion. It's a B2B cloud platform. It's focused on demand contingent hiring and work arrangements. And it is like connecting top tier clients with senior management, not the Naukri kind of time, but with the senior management and subject experts. So you get an idea. So once you have an idea of the company, now comes the most important thing. So this Excel sheet, what it has done is, as I said before, it is being divided into 2 sessions. The first session focuses on governance and promoter behavior, and the second session focuses on the financial health. The financial health is populated from Screener, so you don't have to do anything. But the governance session, we need to do a bit of research, and it is extremely important you do that, especially for microcap companies, because it at least gives you the sense of confidence that this company is worth your time and effort in terms of further research or investment. So basically there are 10 factors in each, 20 factors in each. I've given a breakdown in the factor summary. You could go through it and the description, criteria. So we are going to score each of these 20 factors on a scale of, on a 3-scale model, 0 being it's very bad, 3 being it is okay or moderate, and 5 being it is really good. It starts with understanding the IPO and the fundraise history. So for that, I have given you the ChatGPT prompt, which you can readily use. I'm going to use that and show you. But cross-verify if you feel anything is suspicious. It throws you this beautiful prompt with promoter background and the board of directors, etc. Basically, what are we trying to understand? Let me take you through those 10 step governance and promoter behavior. So one is to understand why did they raise funds. Smaller cap companies might have come like in the last 5-6 years. So try to understand like how and why they raised the fund and what it is used for. So in case of Infolion, it was a combination of fresh issues, which is good because it means the money is directly going into the business, and offer for sales, which is from Bloom Ventures, which was one of the investment partners. One thing I really liked about the company, not an investment advice, is that the promoter of the company is Mr. Gaurav Munjal. He did not dilute his stake. He did not sell his stake. It means he's really optimistic about the prospects of the company. So they have raised 21.45 crores and try to understand for what they have raised the money for. ChatGPT gives a wonderful breakdown. So they raised it for expansion 4 crores, new category 4 crores, tech development, and general purpose. Most of the money is going into new category expansion on future growth, and which is very good use of shareholder money. The money that the company is raising is fueling the future growth. That's something very good. If it's going for working capital, it's not going to do any good for the shareholders. So how do you rate it? Because the money that they raised is of future growth, and you don't find any shady transaction, promoter diluting, it's okay, but then large promoter diluting, I would give a score of 5. And all you have to do is, besides each factor, give a subjective score of 5, 3, or 0 based on what you have analyzed. Next is coming to promoter and director track record. So here it's a single man show, Gaurav Munjal. So how do you go about seeing his track record? One way of doing that is like going to Google, just try searching his name and few keywords like fraud. Unfortunately, it's not a foolproof method, but then it's one of the way of doing. Unfortunately, you have a Udemy founder who shares a similar name, so a lot of his name populates. And another very interesting resource is Value Picker. I would suggest everyone to use that. And that forum, you have a lot of prominent investors who share their ideas, their theses. Use that information to see if you could get any insights on the promoter behavior, promoter quality, or if there has been any fraud. So this is the company. This is another interesting trick you could use. You just put a Control P. If you don't have time, save it, and you get the whole thread. Like this thread was started in February 2022. 2024. This thread was started in February 2024. It is taking some time to load. So you get the entire thread, this interview. If you have time, I would definitely recommend if these threads are available to read, and just attach it, and it would actually analyze, do a textual analysis, and throughout the summary. You could do it for all the companies. Basically, I found the promoter's track record to be extremely clean, no fraud or no litigations. Other way of doing it is again going to the DRHP and finding if there are any litigations against the promoter or any kind of cases. Next, coming to the related party transaction, a very important session. Actually suggest not to use ChatGPT. For this, we can go to annual report and just search for the term. I've already searched and kept it. It is mandatory for the company to disclose all the related party transactions. As you could see, the related party transactions here are absolutely clean. All they're doing is remuneration, which is the salary, definitely, and then the expenses, sitting fees, that's it. Your related party transaction for Infolion is over in less than half a page. I'll tell you why this is important. Let's look at the case of This is Gensol. So this is the related party transaction. Look at the amount of subsidiaries. Nothing wrong with having subsidiaries and the key managerial persons, but then look at the number of companies significantly influenced by the key manager parties, which means the person who's in charge of the company are sitting in these many companies. And as a shareholder, that's a big red flag. And look at the number of pages this related party transaction goes to, almost 5-6 pages. You can get an idea as to how clean the management is. And as a shareholder, it is important that we entrust our money to someone who values minority shareholders. Seeing that, you come to a conclusion as to whether you could trust someone with your money. And based on that, again, definitely Infolion scores a 5. Try to understand a bit about board composition because these are smaller companies. A lot of family members do sit on the board, but also it is important as a business to understand how receptive the family members are or the promoters are in terms of bringing prominent experienced managerial persons and directors into the team, get their view. That can be directly reflected through the board composition and the independence. These data, you need to enter it directly. Check the annual report, enter it. Absolutely no family on board. I have been researching more than 500 microcap now over the last couple of months extensively, and this is a very rare case. Generally, this is between 30 to 40% especially in a microcap. So this again deserves a 5. Next is how much salary they are drawing for themselves. Because again, as a small company, you don't want promoters to draw excessively because that's drain out of the cash that could be used in growing the business. And this captures as a percentage of sales, what is the salary. This number is a bit high. Anywhere above 2% or touching 2% is considered high. I would ideally like this number to be around 1%, but anywhere above 2% is a big red flag. This is closer to red flag, but again, the company has been growing around 50%, and you also see the year-on-year growth. So try to do this for the CEO and the whole-time director, like the most important person. Probably these would be related people. So try to aggregate the number and see if they both combined are drawing more than 2%. If they are, it's a red flag. For this, I will give a 3. Next, to identify if there are any resignations within the managerial positions. I'll show you how you could do that. Important resignation. Go to Screener, and in the search bar, just search for resignations. There has not been any resignations of late, but then on 17th there has been resignation. Try to understand what the resignation is, but then this looks like minor. Many cases these resignations are back to back, and that's a big red flag. If it is happening regularly, it means there are some corporate governance issue and you would want to stay away from them. As an example, look at this, like you could see CFO, resignation of managing director, whole time, and these are happening back to back. And if you actually scroll down from 24, you have a lot of resignation. May, October, the resignations have been extremely prominent. So here again, no major resignation, and this deserves a 5. Similar with auditor change, normal due course of auditor resignation is still fine, but then if auditors are resigning on a regular basis, it is a red flag. There has not been any auditor change in case of Infolion. And look for the auditor opinion, at least for the last 3 years. How do you go and find that? Next, check for auditor opinion or any credit rating change. In Screener, if you see, the company has 0 debt. So in the search bar, try to search for unmodified, unqualified. If nothing populates, try to open the annual report, quarterly filings, and inside that it would be mentioned whether the opinion is unmodified or unqualified. Basically, you want unmodified and unqualified opinion and no credit rating. Check for any regulatory and legal issues. That again you could do using a Google search. All you need to do is try to search for some keywords like fraud, I'm being scammed. I think it's just the same Infolion research. Try to read through it, but basically I read there's not much in terms of this one, but this is something you can just read through. It's basically nothing. But again, look for any legal regulatory issues like through a Google search, the forum inside Value Picker. Annual report should also mention if there are any legal issues, so you can search for the term legal. So all these are, you need to do a lot of trial and error in terms of searching to identify the right information. But what this Excel basically does is develop a framework so that you know what you're searching for. Next is investor communication and disclosure. For me, this is extremely important, especially for microcaps and SME stocks. This tells you how a management or the promoter is thinking about its minority shareholders and how transparent they are in terms of disclosing. It also helps us to understand the management and the company, their vision and the focus. And Infolion does all three, so it gives me a lot of clarity as to what they are doing. Again, not an investment research. This is just a tool to identify and for your initial screening. Now that the governance and promoter behavior is done, trust me, this is extremely clean, so that's much more easier. But there are a lot of companies you would not be willing to give 5, even 0. You will be shocked to see the kind of things that go inside. So try to do these basic screens for comfort that you get in terms of governance and promoter behavior. Now let's move on to the next section. The next section is the financial health. So when it comes to the financial health, the first thing we are asking is from the revenue top to down, what is the business concentration? So again, how do you go about? One, you could ask this to ChatGPT to understand what it is, or do a Control F search for everything in the annual report. You will get an idea. I have done that. Basically, this screenshot is taken from the annual report, and where it says our revenues from operations are highly dependent on limited number of clients. And this is what is mentioned in FY24 annual report. Because of which I would give a 3. This is in terms of business concentration. Next, we go into a bit more understanding the financial metric. So first thing is to understand how is the revenue coming from and are they able to collect the payments. And the most important thing I look for is revenue manipulation, and this captures that. Basically, if there is some kind of channel stuffing or are they aggressively billing the revenue. A number consistently above 30% is a big red flag. Here and there is fine. You have to again look at this very subjectively, industry to industry, but then this gives you a bigger picture. So your receivables have grown much faster than revenue, and this gives you an indication to understand that you need to dig deeper to understand why the receivables have grown much faster than the revenue. Once you look at it, you know what to look for. And here what I would do is I will go to a con call, type for the specific terms and just type for receivables, and it will take me of all the analysts that will ask the same question as to why have the receivables grown faster. I've pinned down what the management said. The management says it's normal, and the reason for the change is a change in revenue recognition policy. So this is something you need to dig a bit deeper. The next factor is the cash flow to EBITDA conversion, a very important factor. Number above 80 is very good, but it's again, these are micro caps. So as long as it's positive and consistently positive, it's a very good sign. Fluctuation 1 or 2 years is fine, but then try to look at the longer, broader picture. It has to be positive. This tells a lot as to how a company that is able to grow without much capital is the best company to investment. Looking at the face of it, this company doesn't need much capital to grow, and it's not above 80, which is what I would typically like, and it's an IT company. But then since it's below 50, I'm going to give it a 3. Again, these are very subjective, but then it gives you a broader idea. I have not given a number for revenues through receivables. This again, I would give it a 3 because I would want to go and dig a bit deeper into what the revenue recognition policy is. Are they aggressively recording the revenue? Next is inventory trends, but this is an IT company. You don't have inventory. You have days of sales outstanding, which is basically how much days it takes for you to collect the payment. As you can see, there has been growth. This is again because of the receivables growth, which is where it is calculated from. So I would again give this a 3. The comment is same. You need to go and dig a bit deeper into that. Finally, the cash conversion cycle, which gives you overall pictures from making a sales to collecting a payment. How many days it takes. Basically, the company for FY25 has taken 63 days. Not a bad number, but it is growing. But also, both thinking the other way, the revenue is also growing that much faster. If this number is going to shoot up drastically, then it is going to be a bit of a concern. But now it's still at an acceptable level. Again, look within the industry to get a broader picture. It's not a standalone number. The factor summary, which I have mentioned here, gives you a broader picture. But my suggestion is look at it at a broader level, industry level. Don't take it word for word. Again, I would give it a 3. I'm being actually very stringent in scoring, but then these are better numbers compared to a lot of other companies that I've analyzed. But again, it's very subjective, as I said. Next is how much capex are they doing. Basically, without doing much capex, they are able to grow the revenue. So with the internal accruals, they're able to grow the revenue. Beautiful ROIC. Asset turn is low because I think they have a lot of cash in the books, which is bringing down the asset turnover. But otherwise, I think it's a very good number. Jupiter 5, they hardly have debt. Most of the debt are either lease liability, which is basically an accounting standard. So Jupiter 5. Very comfortable liquidity position, quick ratio, current ratio. Since service company, if it is not big red flag, I try to identify why. Very good, very nice ROE, ROC, about 20%. This dip is because of increase in equity base. One of the suggestions, try to understand what are the factors affecting these numbers. Try to break it down. It'll give you a better understanding. Again, I would give it a 5 over here. In terms of overall growth consistency, the margins have been improving. PAT margin growth has been consistent, fairly stable. I would again give it a 5 here. And any displacement in these numbers, it's easier for you to pinpoint and go and check in either the con call or presentation as to what the management is saying, whether it's one-off. And we are done with it. And this is the score. This automatically captures everything. Infolion has got a score of 88, which is a very good score. I've been very stringent here, but 88 is a good score. This is the one where I give more importance to initially, and they stand out in terms of the management quality based on my screen. Not a foolproof screen, but at least it gives you a structure as to when it comes to analyzing a company. I hope it was helpful, and as a recommendation, I would suggest everyone to try this screen on all your portfolio companies, and as you do it, you become much quicker. It helps you develop that framework. You'll be surprised to see the number of companies that would not pass with flying colors. Try it on your portfolio companies initially and see what happens. If you're facing any difficulty, please leave a comment and I'll try to personally answer, or my team will reply back to you. I hope this is helpful. I hope you using this pre-screen framework, it would save you from those miserable mishaps that happen in the market. You could easily spot companies like Gensol and stay away from them. Any tips that come, run through the screen and you will have an idea as to whether even it is worth your time to invest. It also gives you confidence in the company that you invest. Do try it out and give your honest opinion and feedback, and do share it with your friends, and do support us by subscribing to the channel, and we would be coming out with more such interesting framework that would actually help you in your investment journey. We would be analyzing a lot of micro cap companies using this framework, and as we do more companies, you'll get an idea, and let's see how interesting scores we are going to give different companies. So also leave on the comment if there's any company that you would want us to analyze using this screen, and we will definitely do that. Until then, take care.